In other business news, it's long been one of the more desirable car brands in the world, but shares in Tesla have been left on the roadside after the car maker admitted that it produced more cars than it delivered in the third quarter, despite profiting to the tune of more than $3 billion. It's a far cry from the days of multi-month waiting lists for the sleek electric vehicles, but founder Elon Musk is promising a return to growth in the fourth quarter. Well, our ICE correspondent Laurie Laird is still standing by in London to discuss Tesla's woes and the rest of the day's business news. Good to see you, Laurie. Tesla's profits increasing by what appears to be a sizable amount, yet the shares are crashing. What's going on?
The profits in the third quarter up to 3.3 billion. That's up more than 50% over the same quarter a year ago. And yet the shares were down almost 10% earlier today. They've recovered a bit, now down about 6.5%. And the worry is Elon Musk did a conference call last night with analysts, and he said, look, the problem is not that people don't want our cars, God forbid. The problem is that we're still dealing with logistics problems. There still aren't enough boats and trains to ship all of the cars that people want to buy from Tesla. And we know that there have been logistical problems. We know that shipping is still recovering from the pandemic. But the worry is that Tesla at some point is going to be hit by waning customer demand. These are very, very expensive pieces of kit. We know that a lot of countries are, if not going into recession, certainly going into economic slowdowns, not least China, where Tesla has really put its sights, has really tried to break into that Chinese market, including a very, very big production facility in Shanghai. So when Elon Musk spoke to analysts last night and really stressed those logistical problems, a lot of analysts are saying, wait a second, that doesn't quite ring true. We are concerned that there might be a lack of demand for these very, very expensive vehicles.
But I mean, just to assuage the fears of those who've still got shares in Tesla, I mean, there is no question that Tesla will survive.
No question at all. But it's interesting to speak about that because it's only been about 4 or 5 years since analysts were wondering whether Tesla could survive. The production, the cars themselves are pieces of technological genius to a certain extent. The problem was always production. The problem was always a low production run. The problem was Tesla losing lots and lots of money. And it wasn't that long ago that Tesla was considered a takeover candidate or a takeover target for some of the bigger car companies. And the thing that kept that back is Tesla's historically high valuation. It would have been, despite the fact it makes so many fewer cars than, say, Volkswagen or Chrysler, it was more expensive by stock market value than any of those companies. So that's always kept Tesla an independent company. But certainly Tesla's technology is considered to be world beating, although in some of its main markets, and let's go back to China again, it is facing greater competition than it has over the past couple of years.
And I mean, as we take in these fluctuations, what impact is all this likely to have on Elon Musk's deal with Twitter?
A question worth asking, because of course he has pledged some of those Tesla shares that he owns as collateral in obtaining loans to finance that Twitter deal. And on the call last night, he did say that Twitter's valuation is looking a little high. Whether that's a suggestion that he is still trying to negotiate down an acquisition price for that is still up in the air. If there is no deal between Twitter and Elon Musk before the 28th of October, that will go back to the courts. Again, the assumption is he's looking for a lower deal, but we haven't had much information out of that over the past couple of days. But I do think we should take Elon Musk seriously when he says that Twitter, sorry, I'm confusing my Elon Musk companies, but we should take him seriously when he says that the price that he has offered to pay for Twitter looks pretty high.
Well, let's move away from the car business and the social media business and talk about the airlines. Some very good news for American Airlines.
Absolutely, from new tech to old tech, Charles, and American Airlines revenues in the third quarter up 13%. That is a pretty good showing, particularly because American, like many of the other US airline companies, have taken capacity out of the market. They're flying fewer people, but they seem to be able to charge them more for those tickets. American said that the fourth quarter will be even better, and that follows very, very good results from all of the other main US airlines.
Okay, we're almost out of time, but very quickly, is it likely to affect European airlines positively as well?
No, I think that the U.S. airlines will always do better simply because they're so much more concentrated than airlines in the EU. And I think when we see it, as and when we see a downturn, we may see some of those smaller EU airlines drop out.
Thanks very much indeed. And we've seen you twice, and you've done great stuff for us. Laurie Laird, Arise business correspondent, talking to me there from London.